we're on the escalator up right now. We need to monitor the fundamentals and the health of that escalator because at some point it's going to turn into the elevator down, hopefully from much higher levels after we've had a chance to exit.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Welcome back to another Altcoins podcast. It is a great day for two reasons. First, it's Jonah's birthday, so happy birthday, Jonah.
Thank you, bro.
Big second, 4-0. Bitcoin has given Jonah and I an amazing gift. And you all out there as well, an incredible gift. Trading right now at $120,000. Pretty insane.
Ay.
Right?
Yeah, it's crazy. I mean,
all the way up to what I think we hit a high of 123. We're selling off a little bit now, but what a rally this has been. I mean, basically, we've gone straight up now for about a week.
Yeah, crazy candles. Basically, ever since the last podcast where we declared that Bitcoin never stabilizes on all-time highs, and it was stabilizing on all-time highs, it's just ripped higher. Good thing I didn't sell any calls. That would have been a mistake. This thing is going fast, and it feels like it's just literally going to be an ice luge straight to 150K.
Yeah, I mean, basically, we were kind of like puttering around at that 109 level, which is where I started getting nervous. But then on Wednesday, we had that one candle that took us from 109 to 111. And then we didn't sell off for like 12 hours. And I was like, okay, that's as good a sign as any that we might be entering the parabola run. The question is that I think everyone sort of has their finger on is we've been talking on the podcast for a long time now about how basically nothing other than Bitcoin and some select coins are going to do well over the next 6 to 12 months. But I'm seeing a lot of chatter around people wanting to buy a lot altcoins now. Like everyone's like, okay, well, Bitcoin's gone on its run. Like now it's time to just buy every alt that's ever existed. What do you think about that?
I don't agree with that because I think that these crappy alts, like, they're still backed by teams loaded with bags waiting to dump. And I think if just from a psychology perspective, I think the mentality of anybody who's bag holding a lot of WIF or bag holding a lot of, Cardano or any of our favorite coins to hate on, Polkadot, like there are no illusions this time like there were in 2021 that the market is just going to keep sending for those assets, right? I think that people will take profit if they're holding on to something serious. Usually, like, I'm not a subscriber to technical analysis, but like I've had it described to me a few times, and there's always some psychology behind, the charts and lines and squigglies that people draw on these sort of price history charts. One psychological phenomenon that I've heard described before in the annals of technical analysis is that if a participant base has undergone some kind of trauma, they're going to sell the next massive rally, right? And so usually there's some chartology around dips in those assets, and then the subsequent U-shaped recovery gets sold hard, and there's a cap on it, and you're supposed to sell rallies into those things. So I kind of believe that lore for some of these assets. Nobody who's bag holding a lot of assets that they've that aren't going to participate in the crypto economy of the future, the revenue meta, whatever you want to call it. Nobody's holding any illusions this time that a new wave of retail buying is going to buoy HBAR, Polkadot, name your crappy one. So one thing I'm starting to do is run screeners on the Sharpe ratio of the top 100 assets, just with some friends in the market. And the most negative ones, I think, are going to be a great sale versus Bitcoin after they do. I think everything will rip for a while, but I think those will be good shorts versus BTC after they've appreciated a little bit from here. The ones that just, and what a very negative sharp means is that there's just steady selling, right? Smooth, constant selling. I think those are the ones that you can look for to short versus Bitcoin, not versus USD. I don't know. What do you think?
Yeah, no, I'm in agreement there. I think that, well, here's where I might differ a bit, is that I think that it's probably Bitcoin's been outperforming some of the other good stuff as well right now. And so I do think that there's opportunity to, at some points, like chip away at your Bitcoin and rebalance a little bit. Like these things they do go in cycles. So let's say Bitcoin hits 130 and hype is still at 47, which is very, very possible. It's kind of what's been happening, is that, Bitcoin on Bitcoin runs, everything pauses for a little bit. So why not sell a little bit Bitcoin, rotate into hype? Why not sell? I mean, Syrup's another one. Syrup's paused a little bit. It's actually been down since Bitcoin started running. I think that offers an opportunity to rotate a little bit. But I think in general, this is going to be the Bitcoin rally. But the question is, another question is, why here, why now? I mean, equities aren't really ripping. Gold is not really ripping. Like, why here, why now, Jonah?
I have a good answer to that.
If you can't pinpoint a reason, it's hard to pinpoint a reason to sell too, right?
I have a good reason. It's that money is too easy. Like you just have to look no further than the lagged comparison of M2 money supply versus Bitcoin. And this is the part of the lagged M2 money supply chart that just starts hockey sticking upwards. And Bitcoin is following it, like, basically tick for tick. And I don't think it's any more complicated than that. The debasement theorists saw this Bitcoin rally coming 10 miles away. We are part of that, group of debasement artists, and we saw it coming, and we've preached from the rooftops about it on this podcast, and lo and behold, it's taking off. Like, yes, there's some doubt about whether it would have started like right now or in 3 weeks or in a couple of months. Like, you never know exactly when, but like, if you're looking for the chart, I guess I could share it. Candlestick charts, Bitcoin, blue line is M2 money supply.
You got some very weird coloring there, Jonah.
I actually I stole this chart from somebody on the interwebs. I didn't build it myself in TradingView, which is why it looks like this. So I tweeted it out. If you guys see any mistakes with it, obviously let me know. But honestly, like, if governments print a bunch of dollars, those dollars go down. This is why oil is rallying when the fundamentals are terrible. This is why euro dollar has gone from like basically almost parity to almost 120. This is why the S&P 500 is up when fundamentals are, less than awesome. This is also why Bitcoin, the greatest debasement hedge since gold came along, is, performing so well. And it's done this before. It'll do it again. And the most encouraging thing about this is that if you look at the M2 money supply line and trace it against Bitcoin, it's kind of a straight shot to 150. So maybe I'm getting over my skis again, but like, I certainly don't see any reason to take profit here, especially given all of the profit taking that took place around that consolidation level of 110,000. Like, that selling's exhausted. We've ripped through a bunch of, short liquidations. And now I think it's just like, I think it's an air pocket upwards from here. There's not a lot of resistance.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Katana isn't another new general purpose blockchain. It's purpose-built for DeFi users to provide the best experience possible. It does this by sustainably generating deeper liquidity and higher yield than any other network. If your assets are sitting idle, then they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners like Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of KAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for the lucky ones. As always, investments in blockchain technology involve risk, terms, and conditions apply.
The other thing is that the treasury companies just keep buying. Looks Metal Planet bought another 100 million. Strategy was buying more. You saw the Sailor tweet
Oh,
today.
dude, I have a story for you about that.
It's
Actually,
freaking insane. And actually, you know what's nice is for the first time ever, it looks like Sailor didn't actually buy the Pico Top. It's good.
yeah.
Crazy that they hold 600,000 Bitcoin. Man, I mean,
What,
it's
man?
just like I've said it before. I'll say it again. I think it's too much. But
It's
one thing that I'll thank Sailor for is he's given us the opportunity to go play this treasury company game. So, for example, today, Bitmine Immersion Technologies is up 20%. They're the ones that are buying Ethereum. So if you want to make a bet, like if you want to make a bet on ETH, this is probably a good levered bet that you could try to take out. BMNR. I don't own any, because I don't like betting. I don't like betting on ETH, but
who? Why would
it's
why would anyone bet on ETH here? I don't understand it. I mean, if
but it's also betting on a little bit of euphoria in the
yeah,
markets. I think you're actually probably better off finding returns in the public markets right now than in alts in things like this. I mean, this is like they're pulling altcoin like moves now.
a hyperliquid treasury fund, like basically an MSTR like instrument for hyperliquid. I saw some charts on X. I didn't verify it in TradingView, but it looks like it's up 100 to 200%. Just another treasury asset for these things. Everybody's doing it, and I frankly can't understand why. I was walking, just earlier,
Hmm.
like late last
Well,
week.
hold on. Just to clarify, there's a I don't know if this is the one that you're talking about. There's something called Sonnet Biotherapeutics Holding,
Yes, that's the one.
and it tripled after it announced that it was going to be merging with somebody to go buy Hyperliquid. So what's actually kind of interesting is that these types of companies are all a lot of them are coming out of dead biotech companies, and there's so much value in these dead biotech companies now that they should probably just like go like scour for any biotech companies that can be bought for cheap. That and the way that this happens specifically is normally they're like a one drug company. So a one drug company will go public, and they're going to try to get their drug passed by the FDA, and then their drug fails trials, and then the company kind of dissolves and just like ends up becoming this shitty little holding company forever. And maybe nothing really goes done with it, and because what they try to do is they try to find a buyer for the shell, because there's some value in that, and some of them just end up, I guess, doing this now because it seems like the best place to sell out for these guys.
You know, I've been waiting for the moment when we pivot the 1000X podcast from crypto to shilling Pink Sheets equities.
I don't know which
And
one's what's
and
better. I don't know
I
which
think
one's
we
better.
think we may have just crossed the Rubicon here with your last comment there. Like it's like I kind of would like to do a Wolf of Wall Street episode where we just like shamelessly, obviously not financial advice, we just shamelessly pretend to shill like these horrendous stealth companies in the hopes that they go and start accumulating hyperliquid and 3x overnight. Like
I'm just
last
saying
week,
I don't do this. I don't own any of these things. I'm not profiting off of these treasury plays, except for hopefully one day Ripple will go public because I own a big chunk of Ripple equity. But other
that
than
was
that,
a great trade.
I'm not profiting at all off of these things. I'm just looking for ways to do it in a smart way. I haven't, and one of the ways that I thought about maybe potentially looking into it was looking at all of these dead companies and kind of making a bet that they're all going to sell out one by one.
It's not a bad take. Honestly, in all seriousness, I was joking about the
Hmm.
Wolf of Wall Street stuff. In dead seriousness, I do think we need to monitor the Treasury company situation. I think that just like all of these Treasury companies are buying right now at the same time, and it's pumping our bags, they will all sell at the same time too. And when they, as we talked about in previous episodes, the commodities saying escalator up, elevator down will apply to the price action here. They're all buying. It's like it's steadily rallying. And when they all want to get out and rush for the exits at the same time, there is going to be a red candle for the ages. And so we do have to monitor this. It is absolutely a sign of froth. I don't think it's cause for concern just yet. But I was about to tell you the story. Like even last week, I was just taking a stroll with a friend of mine in the south of France. He normally lives in Paris. He's a private equity guy and kind of a SPAC artist, a SPACer. And I was like, he was like, wow, but Bitcoin, on the move again. I'm like, yeah, what are you doing about it? And he's like, well, we're putting together a MicroStrategy like entity for the French equity market, French stock market, just to give investors who don't want to open up wallets access. They don't have access to US ETF. Sometimes French are very nationalistic and a bit risk averse. So it's this is
Did,
a
did,
good
did you say
vehicle
did
for
you
that.
say sometimes, Jonah?
Yeah, fair enough. The French are always nationalistic and risk averse, and so why not create a Bitcoin treasury company that copies MicroStrategy? Like literally everybody's doing it. So we have to, we're on the escalator up right now. We need to monitor the fundamentals and the health of that escalator because at some point it's going to turn into the elevator down, hopefully from much higher levels after we've had a chance to exit. But for now, with our fingers on the pulse, so so far so good. I guess worrisome signs would be cracks in the economy that fracture the ability of these companies to obtain credit, or possibility number two would be like a crazy sell off in the price of Bitcoin. But I just, you have to underwrite something when you're long this stuff. And I'm willing to take the risk that we're not going to get like an exogenous Bitcoin related crash that has nothing to do with the rest of the markets. So I think it's going to be a broader macro contagion thing that catalyzes the treasury company unwind, not the reverse.
One thing that happened with GBTC that's relevant to this is that once the threshold was crossed of, for those of you that don't know, I assume most of you do, but for those of you that don't know, GBTC was the fake ETF like product that traded on OTC markets that Grayscale issued, where you could deposit Bitcoin, get issued shares. They would season after six months, and generally why people would do this back then, like 5 years ago, in 2025 and before, is that the product, because it traded on the public markets, you could buy it in your IRA, you could buy it in your 401k, and so it actually traded at a premium. Because it was also the only way like your average retail investor could get access to Bitcoin, and it would trade as much as 100% premium. It was averaging like 30 to 40%. So people were like, okay, this is a brilliant trade. What I'm going to do is I'm going to put my Bitcoin in, wait 6 months, and then sell my Bitcoin for 40% profit, and then just rebuy my Bitcoin. But now I have 40% more Bitcoin. And this was a great trade for a while, and it worked until somebody called 3 Hours decided to lever it up like crazy and blow up the entire ecosystem. And they blew it up because it was already trending in the direction. I think they hastened the fall. But basically, GBTC started trading at a discount instead of a premium because there were so many people that did this and created so many shares of this GBTC by depositing their Bitcoin and doing the trade. The more people that did the trade, the less attractive the trade became. Basically, what I'm trying to say. And once you cross the threshold of, oh, wow, so many people have done this, now it's actually going to trade at a discount because everybody's doing it, the entire thing unwinds and a lot of people get hurt. And the way that I think about this is that the more treasury companies that are created, the lower the discount should be on all of them because there's more options. right? To go around. You don't have to buy this thing if you want access to the Treasury play. So I think in aggregate, all discount rates on treasury companies should go down the more treasury companies there are, assuming that all of the treasury companies are managed equally effectively, which is a big assumption, but I think actually fairly reasonable given that it's not that fucking hard to manage a treasury company. You just raise money and buy Bitcoin. So,
Yeah,
um,
it's funny when you put it that way. It's like, wow, all this financial wizardry and genius. It's like, nah, you just raise money and buy Bitcoin.
you sell your stock at the highs, you issue convertible debt, and then you buy Bitcoin with the proceeds.
But you know what's
They are
crazy, Avi?
geniuses.
Like
Yeah.
I was reading online again, I haven't had the time to dig into this yet. There's a lot going on in this rally and a lot of information to process. But I'm reading that Bitcoin treasury companies in Germany are trading at a discount to NAV. Obviously, in the US, they're trading at an incredible premium, which I still can't
Mhm.
fathom. And yes, I agree. All of these inefficiencies will eventually converge. I think for eagle-eyed investors, there are probably some pair trades to put on if you want like a delta neutral bet on on the space that's kind of like crypto adjacent, but not necessarily just more Bitcoin length. Maybe if you're maxed out on that, but you want to extract a little alpha, you can probably like buy the cheaper treasury companies versus shorting the richer ones.
Mhm.
And hopefully they collapse, kind of like Coin Circle. There are all these little alpha opportunities across the board. I think pairs trading is going to become the new thing to do once things stabilize. But for now, there's just so much money in being long Bitcoin that the goal is literally just to not get knocked off the mechanical bull. You just have to just keep riding it somehow and not get stopped out. I think maybe if things hit 130, 140, 150, it's worth diversifying, but not until then.
So, but you would consider diversifying around. I think your target has been for a long time 150. Let's say
Yeah.
we get to 150 in the next month. Are you taking some off?
Um, that depends. So one thing I'm really focused on is MVRVZ. So let me pull up the chart and share it. This has been my exit metric. Like people who listen to this podcast frequently enough will know that I've been like resoundingly bullish from the lows because we started the podcast on the lows. And, I don't want to be the guy who's like, I remember, I got shouted at Goldman one time for having a consistent view over a long period of time. Like the head of the commodities floor came out and had like went after me one day when I was having a bad P&L day. He was like, Jonah, even a broken clock is right twice a day. You have to adapt. And like, yes, it's true, you do, but like I mean, this is like one of the greatest mega trends in my lifetime that I get to ride. I'm not going to like try to reposition myself and convince others to get long and short and long and short all the time, like on this ridiculous track. Like we started shilling GBTC, not as financial advice again, but just like as an idea when it was trading at a 25 or 30% discount and Bitcoin was trading like around 20 or 22K or something
Yeah, we
like
nutted on that trade.
that was an amazing one. We basically got long BTC at like 15 or 17K, and anybody who listened to us did too. And when I left Cumberland, I just replaced that risk in my PA, and it's like without any question the best trade of my life. So like basically, this is the train to ride, but you have to have an exit metric. I'm not just like pounding the bull drum without thinking about it because that's stupid. So like MVRVZ is you have to pick something, and I think MVRVZ is the best one. So let me try to share my screen again. I'm just pulling up the Bitcoin Magazine MVRVZ score chart because that seems to be the easiest one to look at here. Some of the
Mhm.
other ones are paywalled. So here's the Bitcoin Magazine MVRVZ score chart. You should read the description in detail to get a sense of what it means. But basically, MV stands for market value. It's like a basically just market cap type thing. Uh, that's in the numerator. The denominator is RV, which is sort of like a metric that incorporates where the most recent, like basically where was it last spent on average across the entire market cap. And when the market cap is too high versus where people got in, where it was last spent, that's a top signal and vice versa toward the lows. So Z score just means that it's scored by standard deviation as opposed to the absolute ratio of MV to RV. cycle tops, this thing is amazing at predicting cycle tops. Disclaimer to that is that we don't have a statistically significant number of cycle tops and cycle bottoms in the past for this metric to be like a definitive indicator of tops and bottoms. But for me, it's just, it augments my gut feel for things.
Mm-hmm.
I think when this thing gets above 5 or even above 4, you're supposed to start getting nervous. And you can't really correlate that with a price, because with a price of Bitcoin, because it's, this is a ratio, right? So if like tons of buying occurs on the highs, the score stays low. If nobody touches it and the price just sends to $200,000 a token, then this ratio will shoot up pretty quickly. So like the ultimate kind of takeaway here is like just monitor people's entry prices in something that's normalized, like a Z-score metric. So I use Bitcoin Pro, MVRV Z-score. If that thing gets above 4 or 5, like maybe it's time to de-risk a little bit. If not, I don't really see a reason to. 150K is like a psychological like in at Goldman on the market making floor, there were two types of orders. You could have like a limit order that somebody would give you, or a call level. A call level is just like, hey, day or night, if this structure that I want gets to, right now it's trading 170. If it gets to $2, call me so I can just like make the decision on the wire. Don't execute it on my behalf, even if I'm sleeping. So basically 150K is like a call level for me. It's a time when I will set aside other things that I have going on in my life to like dive deep into my book and my positions and Bitcoin, and just like reevaluate the things that I studied to convince me to get into this position in the first place. And basically the number one thing I'll look at is that chart. And if it's just like tons and tons of fresh capital buying on the highs and that metric is still low, I'm safe.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Katana isn't another new general purpose blockchain. It's purpose-built for DeFi users to provide the best experience possible. It does this by sustainably generating deeper liquidity and higher yield than any other network. If your assets are sitting idle, then they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners like Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of KAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for the lucky ones. As always, investments in blockchain technology involve risk, terms, and conditions apply.
One thing about this, so data sets I think have changed a lot over the last 2 years, even because of the institutionalization and the ETFs. So one thing that I've been actually on the hunt for is trying to figure out, okay, well, what data sources and things did I used to look at that today maybe I shouldn't look at. And one of the things that I found started having problems was a lot of on-chain metrics. And on-chain metrics started having a lot of problems because coins were becoming a lot more centralized. And these people like Coinbase, like they'll sometimes do these massive moves of Bitcoin just because they're reshuffling their storage systems, or they're testing security, or they're doing this, or they're doing that. So I think 4 or 5 years ago, a metric like this, the simple metric like this, was probably okay. But today, I think you probably need to. I wonder if there's a way to strip out some of that noise, like.
Yeah. You're right.
Like if there's a way, like it's very possible. Like if you look at, I mean, if you just look at it, since 2023, it really has not behaved in a quote unquote normal pattern. Like if you kind of look at the rest of the, going all the way back to 2012, there were kind of like these sell-offs and then these massive parabolas, and now this is a lot more choppy, with a lot less excess in it, which could indicate that it's working perfectly and it's just telling you that the market's super healthy. or it could indicate that the metric has changed, and I don't know. I
Yeah,
don't know
like
the answer, but it's just something like, critical thinking, I guess.
no, you're absolutely right. Like I could certainly fabricate a backstory where the metric is functioning just fine. And the reason why it's kind of ranged despite Bitcoin taking off is because people just keep, like new participants keep lifting the highs. Another explanation could be that the metric should be at like 8 right now, flashing like sell with both hands. But because Coinbase keeps moving like tens of billions of dollars worth of Bitcoin back and forth between its cold wallets, current market prices, those
Then
UTXOs are registered as like fresh transactions, even though they're not. And then the data is totally bogus. Yeah, it's a really good point you make. So, if anybody listening wants to debate like cycle top metrics or anything concrete, any framework that's concrete that we can cling to debate whether or not to sell and when to sell, like DM us, hit us up in the Niger Delta Avengers Telegram room, like whatever you guys have thoughts on, like we're
Mhm.
eager to debate them because there is no right answer, right? Like we have to figure this out together um as a community. For now, I
Yeah,
know
I am a little sad. I figured that back in the day, like when I say I'm sad, I mean, sad about the how things have changed. Back in the day,
nostalgic.
there was nostalgic. There was so much innovation on the Bitcoin metrics front, and now I feel like it's really taken a slowdown. People are probably not as interested in doing that anymore. I do feel like the average intelligence of a crypto person has gone down pretty significantly. To be completely honest,
That
it's all suits now.
creates a
Where are the
market for our
cypherpunks? Where are the
podcast.
hackers? But anyway,
I
unless you
think
listen to this podcast, like I'm trying to think of some other on-chain metrics, like longer term metrics. One thing that I like to look at personally, actually, are these what this is this guy that made actually some pretty good metrics way back in the day. This guy is Cuban Tobacco. I don't know where he is today, but he basically and I talked with him a while ago to really understand like what I was looking at. I mean, basically, you can kind of just think of it as like extended Bollinger Bands,
hmm,
and you can see, okay, well, how is Bitcoin trading relative to previous price action, and uh, you know where should I start getting a little bit nervous about uh, Bitcoin? And so let me show you guys what I'm looking at here. Can you see this?
yes.
Okay. So you can basically just take a look and note that every time we get like really deep extended into these red areas, we tend to have some level of pullback. I mean, it even happens down here. The one exception to this was in 2020, whose rally was pretty nuts, 17 to 65. We spent an extended period of time here, but even then, every time we got to the tops, we'd have some sort of pullback. And so this time I'm looking at like 137 to 158. Like this zone, I'm definitely going to be taking off some because I think it's going to be we're going to be extending a bit
Are you going to be
if we get up
taking it
there.
off for the long run or taking it off to like rebuy it 10 to 15K lower?
I'd be taking it off for the long run because I think at that point there, I mean, we're reaching into rarefied territory, Jonah. I mean, $120,000 per Bitcoin is fucking nuts. I mean, my my thesis on Bitcoin from the beginning, and maybe it's just no, I'm not updating my my mental model fast enough right now, but gold total market cap is what right now? 22 trillion.
22. Yeah.
Bitcoin total market cap. So what is it? It's like two and a half now.
Yeah.
Yeah, 2.4. So we're about 10% of gold's market cap. And I always thought that we could do basically 10 to 25. Was my thinking is like 10 to 20, 10 to 25% of gold's market cap makes a ton of sense to me for Bitcoin to sort of start maturing at these levels and start behaving a little bit more like a normal asset, not one that just radically outperforms in all contexts, because a tremendous amount of the outperformance in Bitcoin is the fact that it's still underowned. Now,
Mm.
I'm sort of trying to update my priors here because Bitcoin is becoming a lot more important than even I think I would have been able to imagine 7 or 8 years ago. And so I do think that maybe we can get to 30 to 50% of gold's market cap now. But as a trader, one of the things that I always tell myself is that if you're lifting up your targets as you reach them, even on a multi-decade long trade, you're probably doing something wrong. And I just think like this is like an insane thing to think about, that an 8 year, like, oh, where could Bitcoin get to sort of ideas like fast approaching. It's something I'm kind of grappling with right now. It's like
Yeah.
at what price does Bitcoin become just fairly valued to you? And the answer could be uh never, because it could be you might say, no, we're just going to print money and Bitcoin's going to go up because we keep printing money. But I think at some point you have to, like, everyone here has to understand, like, the reason that Bitcoin does so well relative to all other assets and destroys the Nasdaq and destroys the S&P and destroys all of these things is because it's underowned and not accepted in the same way that all of these other things are. At some point, whether that's 150,000, whether it's 250,000, whether it's 500,000, it starts to act like a normal asset, my personal opinion.
No, I think that's a really sobering take. And maybe because I'm so bullish, my pushback on that take is just cope. But like, let me bring up a couple of things. The first is that, you know, gold is a moving target. It's not so
Mhm.
long ago it wasn't so long ago that the market cap of gold was 10 trillion. Now it's 22, right? So it's entirely possible that Bitcoin, you could be absolutely right,
Mhm.
that the absolute maximum market cap, like your prior assumption that Bitcoin could be 10 to 25% of gold, like that could be totally right. And maybe Bitcoin will never surpass 25% of the market cap of gold, but gold just keeps ripping. And so,
Mhm.
you know, Bitcoin at 10% of the market cap of gold, it's kind of the bottom of your 10 bit at 25
But
range. And
once
if,
but once it starts doing that, then I think it's acting like a reasonably normal asset then, right? Like it's acting like a
yes, but
silver,
it would be on the
right?
bottom of your range at a time where, like dollar debasement hedges are going up. So you would rather own Bitcoin than
Mhm.
gold because it's at the bottom of your range. Maybe you sell it when it's like in the middle of the range, like 17% of gold, and you pivot to gold, or you rotate some of
Mhm.
your assets to gold if you're just worried about dollar debasement. So that I would buy into, actually, rotating Bitcoin into gold as a way to de-risk Bitcoin rather than rotating it into dollars. Um, but you know, let me just bring up a couple other frameworks. A lot of people, and not stupid people either, like Brian Armstrong at Coinbase will tweet about this. Like, a lot of
Mhm.
people think Bitcoin should be worth, well, flip gold, right? It should be worth at least the market cap of gold, if not greater, because it's digital gold, just easier to transport, right? Easier to move money around. And maybe in an era of capital controls, you'd rather have a thumb drive than, like, a gigantic uncarryable sack worth of gold if you're trying to, if you're a nation state
Mhm.
trying to move money around. Equally, even crazier people, and so the Bitcoin flipping gold thing, that's like almost consensus in the Bitcoiner community. um, there's an even crazier group that think that Bitcoin will eventually supplant the dollar and become the global reserve currency with the market cap of the dollar. Now, I think that's a bit nuts, but I think that, like,
Mhm.
flipping gold is on the table, maybe a 25% chance. So maybe instead of just saying Bitcoin should be X bit at Y% of gold's market cap, we could do it like a probability weighted analysis where it's like, you know, 2% chance over a 10-year time frame that Bitcoin flips the dollar, 10% chance that Bitcoin flips gold, and the remainder is like, it's 20% of gold or something. And where will gold be in 10 years after all this profligate money printing? So I think if you were to just sort of like take that expected value, Bitcoin's probably looking, maybe I'll do it and tweet it out, like just make a Google spreadsheet, like a really stupid toy model that you can play with. The EV of Bitcoin is still probably way above 150K in any of those scenarios, or the aggregate of them. So probability weighted aggregate of them. So like to me, I'm more worried about like that MVRVZ metric is one input into my mental model. Another input is like, how will I feel if I sell Bitcoin at 150K when BTC is still just tracking M2 money supply? So it's basically pricing in things that have already happened on a lagged basis. And Powell is still in the seat. Rates still haven't been cut. We're like less than 1 year into the Donald Trump pro Bitcoin, everything is for sale, capitalism on steroids presidency. How would I feel then? Right? Like I'd feel kind of fear of missing out. And maybe that's stupid. But I really, discussing it with you, I like the idea of if it starts to look just way too good, like selling Bitcoin to buy gold, not selling Bitcoin to buy USD, which I hate. I think the dollar is going straight down for the foreseeable future. I don't want any dollars in my portfolio. I want stocks, real estate, Bitcoin, gold, anything that holds its value against the dollar. I think that's what you have to look at diversifying into. And, I guess the other question is like, do you diversify into altcoins with potential, like we've mentioned Hyperliquid and Syrup a bunch of times? Yes, I don't think we're going to get a broad-based alt season because there were too many coins a year ago and there are even more too many coins now. So like, I don't think we get a broad-based rally. It has to be somewhat targeted. Otherwise, like, where's the money coming from and why and how? It doesn't make any sense anymore to me.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I don't want to discount the fact that there are actually reasonable arguments for Bitcoin. Like I wrote an article 4 years ago about de-dollarization, and how I thought that the dollar was likely to get hit pretty hard, and that there was likely to be some sort of balkanization among currencies in the world, and that we would see reserve assets sort of getting more spread out. And I think that has happened to some capacity. So I do think that there's some take here that, okay, well, instead of storing your money in the dollar and euro or yuan, I mean, 10 years ago, you're basically like, I'm going to store my money just in the dollar. Today, a lot of people actually, even in Europe, like, again, they've cut down on their dollar exposure. Definitely people in Asia have cut down a lot on their dollar exposure, and they hold more of a basket of stuff. In the US here, we talk about the idea of just simply holding your wealth in S&P, like don't hold your wealth on the dollar anymore. And so I do think that there is, some argument that Bitcoin will eat up a portion of that wealth storage piece of it, and actually end up cannibalizing the position of gold. So I'm sympathetic to this argument. I think that process would take a very, very, very long time, and extreme volatility from Bitcoin. Like, let's say if we trade from 150 back down to 100, that would delay the process by like another 3 years.
Yeah,
but
no, you're right.
Three to like 10 years. Yeah, I don't know what I really think. I probably need to spend more time on this. I mean, like I said, my target has always been that 10 to 25% level of gold. And it's crazy that we're here and we're here. And as a trader, I take off when I get to my targets.
Yeah, that's good discipline, and I like that. And basically, this is why I like talking to you, right? Like we have two very different perspectives. You are the ultimate contrarian trader. Like you got into Bitcoin, you threw your entire life behind Bitcoin when it was the most like joke asset that kind of had a mega cap, right? You went all in on it at a time where everybody else was probably laughing at you and looking down on you for doing so. And equally, now that everybody's like getting greedy, you're doing the Warren Buffett thing and starting to allow yourself to be a little bit fearful and talking
I
about
think I
getting
think I
out.
do have to fight I think we all have to fight back against those impulses a bit. They haven't. I think over the last year or so as well, they haven't served me well, the contrarian impulses, because I'm good at identifying opportunities early and finding things that are very uncomfortable to be in, and that's been very good for me in general in my life and my career. But we are entering into a transitional phase, right?
Like
We're
this is where
entering
my
into
experience,
this is the mainstream adoption phase. This is like trying to be. I guess one way of putting it is it's like trying to be contrarian about Facebook after the Social Network movie came out. It's
yes.
like, all right, it's like, yeah, Facebook's got to be peaking now. It's done so well and made a lot of money. Nobody believed in me. I invested in Facebook, but now they made a whole movie about it. So I guess it's time to get out.
I mean, like
And then Facebook proceeds to rip faces even harder for
it's still
10
ripping
years,
faces.
15 years, and continues to rip face today.
Yeah.
So there is that aspect of it that I am cognizant of.
But like this is why I'm glad we're having this conversation here sort of in the open and trying to do this in public because I have a very different set of experiences from you. I'm not a contrarian. I'm a trend rider, right? And there, again, I'm just going to go back to a couple of anecdotes from my experience. The first is I bought Facebook stock at 19 because at $19 a share after it tanked on the IPO because I had firsthand experience with it. It was my generation. Like I went to Columbia, we got it second. Everybody I knew was on it, and I knew people like I had one degree of separation from people who were like inside of the company, or actually I knew some early employees as well. I was talking to them, like they were telling me like, "Oh, this is crazy! Every day we're getting more views than the Super Bowl. We're growing at like these insane compound annual growth rates. It's wild. Nobody's ever seen anything like this in human history." I just remember thinking like, okay, I'm gonna take a yo here. So I took a lot of my money when I was, in my early mid 20s and put it into Facebook at $19 a share. And I sold it all at $30 a share after I made a 50% profit, whatever, 55% profit, whatever that works out to. And I was like patting myself on the back. And now it's trading like more than $700 a share. Like obviously I'm the fool, right? So I missed out on that trend. And then equally, another thing had just gone on in commodities. I'm going to weave all these stories together for you, Avi, as well. I'm not just rambling here. Another thing had happened, which was the 2000 to 2008 commodity supercycle, where China was buying everything and commodities were just trending upwards. It was like, is this the new asset class? Like it was the Bitcoin of its time. People who never would have like even dreamed of buying into metals and energy
Mhm.
commodities were lifting oil and natural gas and gold and silver and steel and copper and everything else. So there was that super cycle that had just happened. And then the final thing is you learn this when you trade time spreads, like month one oil, like
Mhm.
March natural gas versus April natural gas, or like September crude oil versus October crude oil at WTI, which used to be constrained. Like when there's a constraint, a bottlenecked system, and you can get a parabolic move because there's literally no clearing price anywhere near the current mid market where you'll find a seller and they're just buyers, looking for storage space or whatever, or looking to
Mhm.
sell, like, or there's some crazy thing that happens on expiry, like when WTI went negative. In bottlenecked systems, 80% of this is the saying in commodities, 80% of the profits come from the final, like, 20% of the move in time space. So like, it's been trending for 8 months and the final 2 months make 80% of the profits or something. So like basically all of these three stories coming together, like as a commodities trader, we have to act, like I ask myself when I look at Bitcoin, I'm like, okay, is this a super cycle where there's a broad based, global adoption of the commodity? Like, yes. Number two, is this something like Facebook that could just run for years as society adopts it? Yes. So like so far we have two boxes checked. Third, like is there some crazy bottleneck? I haven't really answered that question yet. Like I don't know how much Bitcoin is available. Certainly, MicroStrategy and Satoshi don't seem to be selling, right? The big bags aren't like the big long term holders aren't selling. So I think we've got like 2 out of 3 commodities trader boxes checked for like yes, this thing can run another 10x from here. Ultimately, though, like maybe actually while I was on this rant, I came up with one on-chain metric that we could talk about, which is coin flow to exchanges, to and from exchanges. Like, I think if you start to see giant like bars on that chart of coin getting sent to exchanges from long-term holders, like if Satoshi's coins start to move, or if like it just the big wallets start moving coin to exchanges, maybe that's a sign to like buy puts or get out of the way or short altcoin junk against your portfolio just in case. So like that, I think that could be a good on-chain metric to monitor, because I don't really see a way that one gets doctored or becomes irrelevant. It's pretty transparent.
Jonah, I always love your rants, and I especially love them when they include shorting altcoins, because that's my favorite thing to do in the world, to short these horrific things. So, I mean, honestly, the next few months may give us some great entry points on shorting the stuff like World. I wouldn't touch anything right now. In fact, right now I'm probably more inclined to buy trash than I am to sell it. But there will come a day where you'll get on this podcast and you will hear me talk about how this is the best short of a lifetime and you should take it. But until then, I will leave you with let's enjoy this bullish ride. I know you're enjoying. Yeah.
I really enjoyed this conversation, man. Let's drink. I'm certainly going to be drinking tonight. It's my 40th birthday. I'll see you soon, buddy. Have a good one. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.